Last week, the SEC, Gary Gensler, announced that crypto exchange Kraken agreed to pay a $30 million fine for not registering the offering and sale of its crypto asset staking as a service program. We also heard from Coinbase's CEO, Brian Armstrong, who said on Twitter that he heard the SEC would like to get rid of crypto staking in the US for retail customers. So if the SEC bans staking for US retail customers, that Ethereum will have to go somewhere else to get staked. In the past, maybe as early as a week ago, 20% of all Ethereum that was staked was on Coinbase and Kraken. So more than likely, Coinbase is going to have to suspend its staking service as well. Again, that Ethereum is going to go elsewhere to get staked. Now, the most popular and best, what they call liquid staking derivative protocol, is Lido. And so let's figure out where might be the best place to, say, invest in Lido. We could see in January it had this massive move higher on the monthly chart. So maybe news got out somehow because it went from $1 and it shot up to more than, actually it shot all the way up to almost $3. But the news just kind of came out last week about banning staking in the US. So you never want to chase price. You know, on the weekly chart, you see these wicks here. More than likely, this was profit taken for folks who got in down at the $1 area. So never chase price. Right now, we have a situation where price is in equilibrium, meaning that there is not a imbalance of sellers or buyers in this area. As you can see, as price shoots out, let's just label it. We'll do 210. So as you can see, as price gets above 260, you have an imbalance between sellers and buyers. So sellers push price back down to this area here. And on the downside, let's just say 210. You have a situation where you have an imbalance between buyers and sellers, and the buyers bid up price. So I think the best place to get into Lido for this regulatory seismic move is going to be in this area here, which we'll say is between, we'll just call it 190. And I'm going to label that green to denote a buying area. Now another protocol which is very similar to Lido and has been compared to Lido is Rocket Pool. Just wanted to look at it on the monthly chart. How does it look on the weekly chart? Right, so you had this breakout in price. Again, same time frame, beginning of January. So we have weekly buyers at the, we'll say, 1850 level. And again, these wicks represent profit taking. So where might be the best opportunity to get in to go long? Really tough to say. Sometimes in trading, Fibonacci retracements and extensions are used. Some people like the 89% retracement from the origin of the explosive move higher. So if that would be the case, you're looking at maybe $25. Just want to see how that looks. So maybe you have potentially two areas of interest. Maybe the 3150 level. And the $25 level. Based on these extended range green candles. This one got retested, so it's not fresh, meaning price came back down to pick up any unfilled buy orders before moving prices higher. This area would have been an area of interest if price could have closed above this pivot high. So I think if you could get in closer to where the weekly buyers are, that's ideal. And the last liquid staking derivative protocol that's out there is Frax financing. So we just need to find, nope. Let's see. Some of these exchanges, the liquidity might be very low, so you won't even have a, here we go. You won't even have any data to create a price chart. Alright, so this is Frax financing. Just going to go to the monthly chart. So right off the back I can see potentially a target at $22. I also see consolidation, then a breakout. I also see selling pressure now, right, from the profit takers. It's also reacting to this pivot low over here. Let's go to the weekly chart. So as you can see, it's kind of reacting to these pivot lows. Let's go to the daily chart, but we need to mark that off as well, because it's going to be really the first test if price was to continue to climb up to the $20 level. So that level is 14. Let's go to the daily chart, and I see a nice I'll move this over here so I can widen the price chart. So there's two levels. Right now you have some consolidation. This potentially setting up to be a bear trap. Where price may bounce and go higher. But I prefer this area here at, let me just mark that off at $9. I prefer this area right here for a couple of reasons, and we're going to call that 650. I like the structure. We have a rally in price, basing, then a strong move out. This is very similar to this level. Rally up, base, rally out. But this level is closer to the origin of the breakout after the long range, we'll call it accumulation period. So let me scroll out to the weekly again. I'm going to take off these arrows here. So again, current price is at $10. This level here could be a bull trap, or bear trap rather. I prefer this level here, which is the origin of the breakout. So I'm going to keep an eye on Frax financing. But again, the three protocols you have out there is the Lido, the rocket pool, and the Frax financing for opportunities to benefit if and when the US bans staking for retail investors. Until next time.